All right. So let's see. Remember last week, right? So this is market open, right? Yeah, this is market open. Saturday we talked about a potential reaction anywhere there, right? Um, Pretty much expecting to see how this pretty much our closure, what would happen immediately after that, right? So as you can see, we broke below, right, signifying not necessarily a liquidity grab, but pretty much reiterizes the overall bigger picture that we believed would occur was true, and by that I mean that we started from here. Right, pretty much, right, what we remember as far as what we've been talking about for the past, I guess, couple weeks, um, since this date, since September 24th, right? Remember September 24th, we had eventually concluded that. Ooh, hold on, I think I dropped something. No, we're good. Oh, my bad. We had pretty much concluded that this was not accumulation because, right, we've emphasized this for months, and that is that schematics do not have the flag shape pattern, right? They more so have a structured range, right? That's what we've been trying to say for the past couple of weeks, and the reason why that is because in order for, in theory, in order to convert supply to demand or demand to supply on this massive of a scale, it's gonna take a lot, right? Because we're already trying to essentially try to recover from a very important weekly break of structure here. Ooh, my bad. A very big break of structure here and consecutive lower highs, I'm sorry. Right? So no lower high has been broken. Right? We've already taken out a very important key level in structure because after this high, we led to a break of structure, showing an overall bearish market, right? Which is why I've been pretty much emphasizing that we should be looking for that continuation, because this narrative goes even beyond what we're already talking about now, right? Maybe not on this, but remember in EU when we were talking about that 2-week. Right, for the people that have been here for a while, you guys know that we've been bullish. Ooh, can't find my fib. Since essentially the 50% here. And just to put it into perspective, right? What does this here mean? What does this reaction and follow through mean? In theory. Exactly. So if we just mitigated this, then what is your immediate target based on structure? Highs, exactly. Which is where? Somebody annotate that on the screen, please. Perfect. So, since we pretty much settled this and made this the overall bias since March, right? Can you legitimately justify a sell? Can you justify a sell if you're inside this process currently? Without saying if? No, exactly, because you're in the process of bullish order flow. You're in the process of that, whereas this is liquidity, right? And also, right, this is now unwillingness to continue lower because our new low was not created, meaning that because this high did not create a new low, this is now liquidity, right? So this entire bias has been there since day one. Since day one of RCV, that entire bias has been there. So if you were able to listen and pick up on how to actually enter in the trade, then you're legitimately in a very nice swing, in a very good position for yourself, because this is a very good first swing, first position to take using these methods and using obviously the ideology. So coming back to DXY, H4, right? So we were talking about here, right? We've now taken out this structure point, meaning there's legitimately no reason to think or to assume any type of bullish movement unless you get a significant break of structure, right? So this is market open here. This is market open here, right? That means as soon as we got there, and we got a nice sell-off here or buy here during New York on Monday, right? But even though, right, we have minor intraday and or scalp breaks of structures here, we must understand the bigger picture, which is this high created this low by taking this low out, right? So once you acknowledge that, right, you can now start to break it down and start to reiterize structure inside of structure, and you'll notice that this is the final decent pullback before we just pretty much melt it down here, right? Meaning that now, if this substantially breaks, right, then I'm gonna be alerted. I'm gonna be, I'm gonna be alerted, if that makes sense. That means I'm going to be aware of what happens from the break of structure here, and then go on from there, right? So for the single reason that we actually reached up here, I didn't trade this day. I didn't trade. This is during London, I believe. No, this is during New York Open. I'm sorry, during New Day Open. Right around 4 p.m. Yeah. So since I see this, right, I don't want to mistake this as a break of structure. So I want to see what happens, right? So we see that this low created this high and or liquidity grab, but I'm still going to consider it a high because it tested this high, right? So this is our full leg, but this is the point that created that final push, right? So in order for this bias, right, to essentially, or this to be a break of structure now, is if, right, we hold that previous low, play inside the range, go into discount, and give higher movement. But obviously we didn't get that, right? And we broke that low, right? So we broke that low, right? Now you can see that this point pretty much led to that entire leg down, that final leg down, I'm sorry, right? So price naturally came to mitigate that position there, or whatever is in this wick here, right? And then led to another break of structure here, right? Now, right, as we're coming lower, right, now you notice here is our final push down, right? So now this was broken. We gave a lower high and we gave a follow through. But even though this happens, you still have to acknowledge that this entire leg is still in play, right? And this entire leg is still in play, right? So this is why I want to reiterize continuations over reversals, because of the simple reason that in order for you to legitimately change direction, trend, right, there has to be a lot of things that has to happen, right? So technically now we have to break this high currently in order for me to want to think this is a bullish market right now, unless we give a pullback and then another lower low, okay, and another big lower low, right? Then okay, then this is going to be the point where I see that, right? But until that happens, if that happens, I don't have a reason to want to think otherwise of the bias, right? So as we're coming here, right, we have our higher high from a pretty much a minor intraday scalp, whatever you want to consider that. You could even go to 5 minute for this, right? And then we give a follow through, right? But this is the low that created the last high, right? That was broken, and we are now pro trend again. So this was this morning, right? I actually wanted a premium inside of here, but I didn't get it. But I did get a scenario. I did get a scenario in GU, which is why that was my focus this morning. But right, even though we got this premium here, we didn't get this premium here. We now created a new range, and we actually did get a premium here for a continuation. Right, so just because we didn't get this premium doesn't mean we can create a new range, right, and make a new premium, right? So this is actually something that I picked up on over the past couple months, because I was simply, for example, once price hit here, I was still expecting this. So that's why this is going to be the new structural range concept, and that's pretty much acknowledging a high that created a low and playing in between that range for pro trend, right? Naturally, you'd see that. And I mean, you even see it on a scalping scale too. On M1, you'll see it all the time. I'll show you an EU right now. But yeah, for the most part, I didn't get this premium here, unfortunately, but there was still another opportunity here. Right, so that goes to EU. Right, so yeah, so this is my scenario this morning. Like this is what I was waiting for. And pro trend, I mean, I'm bullish overall. We have no reason not to be, right? I see that this on the 15-minute, right? You notice there's a big impulse, and then there's like a corrective move that starts, right? So that I consider that an entire leg. Right, so this is my point of invalidation, right? Because this is where that pretty much corrective movement started post impulse, right? So as you can see here, I'll show it to you guys. If I can see that far, I should be able to, yeah. So on the 30-second here this morning, I saw an inefficiency here and here. So the fulfillment is what I pretty much highlighted because I saw it after it was filled, which was, and I'll show you guys right now. Right, so I noticed this. Right, this is 6:51. Yeah, I didn't start looking at the charts until around 7. Yeah, so it had already broken structure by the time I saw this. But the reason why I acknowledge this is because if this move upwards has a reason, right, then all I'm doing is trying to continue trend. Right, so this, I don't know why this got deleted. Well, this right here, I put this line here because this is also right here is a scalping break of structure. This is the minor intraday break of structure, right? Post impulse, the corrective move downwards. Pretty much this is the high, so I consider that the structural high of this range here. So as you can see from the 30-second inefficiency fill reaction, right? I wanted obviously to come here, which was the same reference point from DXY. Unfortunately, I didn't get it. right? But as you can see here, right, this could have been, no, it wasn't there. I don't remember. I don't even know if I actually found a reason why this happened here. But it made sense in the same aspect, right? Impulse, corrective move. Corrective move started here, technically a point of invalidation. But I don't want to make that a rule for you guys, because there's I've seen a lot of scenarios where this will reach the discount here. So just take that lightly, take that based off this scenario. And honestly, I didn't even take this trade here. I took the GU trade that I'm going to show you guys, right? But here, right, a new leg started, right? That one, this previous high was taken, right? And then now this was, I believe, a 15-second. Yeah, 15-second right there. I believe there was a 30-second too. Yeah, 30-second count. You could see it there. But you guys see that there, right? Unfortunately, I wasn't even looking at this, right? I hadn't. You can see that right there. I had my alert that the only reason why I would have looked at this pair at this time is if that alert went off. So as you can see, the alert never went off. Right, and then from there, new structural range here, continuation, upwards, continuation, upwards, continuation, upwards. Right, so here, even though this is a scalping structure break here, right, you have to acknowledge that from a bigger scale. Well, actually, let me delete this extra stuff first. Right, technically this is the low that created this new high, minor intraday break of structure, because we broke this range after the impulsive move. So I consider this one leg, and then we reached the pullback, and then we took out this high up here, right? So I wouldn't consider this scalping break of structure as a full-on break of structure, but more so a pullback initiation, right? And from here, we actually reached a discount right before 10 p.m. here, which is right before overtime. I mean, right at the end of overlap. I'm sorry. And from there, right, price just is continuously flying. So I'm actually pretty sad I missed this one. Even though I still am in from the bottom, I would have liked this intraday continuation. Right, aiming.
I have a quick question. How would you have answered that right there where you marked it? Because that's where I was looking at after that happened, like where I could have bought, and I couldn't really find like how exactly I would have played that off.
Well, what is it that I just pointed out?
I stepped out for a minute. That's why I don't know if I missed it.
Okay, yeah, I pointed out this break of structure here.
Mm-hmm.
So now,
But right there we have it divided in the first gray box.
wait,
That's
what?
where I was like thinking to myself, right. I'll mark it. Right there.
Mm-hmm.
Like, how would you have played that out? Because I was trying to find like a wick or a candle or something, and I didn't find anything.
30-second. Push down, pause, reaction.
Oh.
Right, so I would have wanted to enter at either this inefficiency fill right here, but my SL would have been under this wick. Why? Because there could have potentially been something inside of that wick, right? So that would have already made this, I think, a 2-pip range, 3-pip range. Yeah, that's solid. I would have definitely gone off of this inefficiency fill here.
Right, I wouldn't. Yeah, I wouldn't have seen that.
And the reason why I even looked in the seconds time frames there is because you see how this is an indecision candle, or technically indecision, right? You see how there's a push down and then there's a pause,
Yeah.
before we then led to this break of structure here. Right,
Mm-hmm.
so because there's the wick here, that means that something happened inside the candle. So that's automatically why I'm gonna try to find something inside that candle.
Oh, okay.
Right.
Yeah,
So
I
now
just
the only
looked at
reason,
that and I didn't really see anything else. It's like, what the hell?
yeah, and either
I know I
way,
could have caught something there, but I just didn't know what.
either way there, immediately after that, right here, this would have been another reentry here, right? And you could have easily trailed your stop on pretty much the previous low, until that breaks. Right,
Yeah.
now the only reason why, if you didn't catch this one's a lot more riskier, is because you're now buying midway through the move, right? So when you're looking at this now and you see this pretty much the high here. Where is this? Where is this? Where the hell is my fib? Okay, right here. Right, notice that you're now buying here, right? And you're leading up to this impulse here. So you're in this discount of this full range. So you now have to keep in mind that your pretty much price can come right back into your entry, right? And pretty much break you even or mitigate something around you and then create a new impulse, right? So that's something you have to be aware of, right? Which is why I only would have wanted to enter in this original POI here, because based off of this range, right? If this would have pulled back here and it went all the way up here, then naturally I wouldn't. There's no way this is going to come back down here unless my bias is incorrect. Does that make sense?
Yeah. Thank you, man.
Yeah. So pretty much know where in price you are from a higher intraday perspective or a swing perspective, because you don't want to hold the trade for a very long time just to then have it break even. You know.
Yeah.
Which is also which goes into partialing out, which goes into knowing when the TP, and all that stuff. But I mean, there's plenty of opportunities as long as you can acknowledge. If you can acknowledge it, right? Obviously, this is at 1 p.m., but still, target was smashed here. But yeah, this is flying. This has no reason to stop. Right? But do you guys understand why this is flying? Like, legitimately, do you guys understand why this is happening? And why that didn't happen? Right? Do you guys understand why that actually happened? Because do you guys remember when I talked about this a couple weeks ago? Yeah, like 2-3 weeks ago. Do you guys remember when I was talking about what this meant? Can somebody tell me what this meant? Yeah, but what does this mean? What does this mean? There's no specific way to say it. I just want you to tell me what it means. Anybody? How many people do we have on call? 14. There's 14 people on here, and I see the same people on the Zooms for the most part. So I know somebody in here knows the answer if you've been watching the Zooms. I'll wait. Structure break. Yeah, it's showing its hand. It's showing its hand. That's literally what it means. It's showing its hand. It's showing where it wants to go, right? Because remember we referenced this. Remember we referenced this. Yeah, sign of strength is a good way to put it. But do you guys see how this showed its hand and then gave us a premium? I mean, a discount, I'm sorry, before that. Right, well, obviously this one didn't give us a premium, a discount. Right, but it gave us a bias. It gave us a reason to want to take a certain type of position, which is a buy position. Right, and then ever since here, right, that entire leg has made sense. Yeah, it makes sense. Good. That's what it's supposed to do. It makes sense, right? So we pointed this out a couple weeks ago, and now you're seeing it play out, right? And because we have no immediate targets to the left, right, this has nothing but room. But that's only because we literally called this structure pretty much a structure point, right? That pretty much gave us a bias, right? And then just from there, that's all it is, continuing the bias. All right, so we ended off on GU, right? This is I'm currently in. This is the one that I focused on this morning. I actually just smashed TP1, even smashed TP2 here. Well, not TP2, I'm sorry, but I was pretty much referencing or observing what would happen after here. So this one's a weird one, right? Because I was looking at structure this morning, right? Lower low, lower high, higher high, lower low, higher high here, big impulse, higher low, higher high, higher low, higher high. Meaning this is now my point of validation of my bias. Right, so even though there's a lot of upwards and downwards movement, I'm still acknowledging my two structure points, and I'm acknowledging where in price I am, right? So, because this low led to that final high or series of highs here, this, right, is now another pretty much, not a point of validation, but more so a point of reference that if that breaks, okay, now maybe I'm going to start considering, looking for sell positions. Or sell positions, right? Because even though this leg here pretty much led to this high, that broke, the overall structure is still intact, right? And that was something that I was trying to pretty much force myself into, because I know I've taken hella losses wanting to pretty much reversal chase, right? So now I've pretty much strictly focused on trying to trade pro trend. Right, so now coming into our session. Right, well, before that, I'll show you guys the POI. Right, this is actually M1 wick. Right, you see that, not that box there. You see this wick here? Wick, down wick, oops. Down wick and then upward move. Right, and you could even leave that there. And then in the 5 second, there's actually, like, you could actually see the candle here. Right, you can see the candle here. Push down, and then that happened. Right, but just using that whole 1 minute wick, but you now see that there's a 5 second SC in there. Right, so right, so from here, right, we came into the point of reference one time, and I actually took a loss here. I took a loss. Honestly, I rushed myself here. Right, I took it off of this. I took it off of this inefficiency fill here, because I was thinking of this mitigation that led to this higher high here, scalping break of structure, but I didn't realize, right, that this bearish order flow is still in play, bearish structure is still in play. So that was my mistake there, right? And I should have waited for what I did wait, which was here. Where we had the reaction, and we now had we had the top of the 50% here, and then pretty much give a reaction to the upside, right? Which led to that structure break there, or those structure breaks there. Right, scalping break of structure here, immediate break of structure, and then this overall leg, minor intraday, right, was taken here, right? So this is another one that was weird. I was actually wanting something here at first, right? But I was going off of the reactions, right? And I saw from here, right, that as we finally broke structure, right, we then took the liquidity of this, and then instantly reacted, right? So because we took this liquidity and instantly reacted, there has to be money here. There has to be, right? Because obviously we just reacted from there. And not only that, but immediately after, something I try to do, right, is when, especially if I'm trying to guess a reversal, if I get this reaction and we react off of something, then bearish order flow is still in play for the most part. And more than likely, if you try to buy here, you'll lose, right? But that's just my observation, right? So from here, right, we gave this reaction liquidity grab, and we came to create we'll create equal highs here, right? So that's automatically, a big alert sign for me. So now all I need is a reason to risk, right? So I have a reason to risk. I have a reason to risk there, right? Which is here, that mitigation here, which is where I took my entry. Or you could even see this micro break of structure came back into this candle, and this is a conservative entry, right? Which then led to break of structure 1, right? Then we mitigated back here, led to break of structure 2. So now I know that I'm in the clear, right? It means that this idea is obviously playing out now. And my first target was immediately the leg that created that final push down, right? This whole intraday leg here, right? Next target was equal highs here, which that smashed, right? And then I had an alert to see if we would break this or not, which we did. So now it's pretty alarming though, because, right, obviously because we're in Asian sessions, we don't see a ton of supply there. We don't see a ton of supply or demand here, right? Slow volume due to session. So I know there's money in this wick, right? So I'm trying to see what happens once we touch here. I don't see this reacting from the inefficiency here because there's money up here. Preferably there. Yeah, so I want to see what happens here. I want to see if we're willing. If we take this out, then we're easily coming for these highs. This high here and this high here. Most definitely. Right? If we can take that, pretty much that point there. Right? But I'm pretty confident in it. I don't, obviously it depends on the reaction here. But something too that I haven't seen none of you notice yet is that the month just ended. And I don't know about y'all, but that looks extremely bullish to me. Right? And keep in mind, we're still playing, right, this entire thing, which is pre-supply, selling climax, automatic rally, secondary test phase B, spring, test, LPS, right, leading, coming back. And once we take these highs out, that's barely I'm sorry, that's not an SOS. That is optimism. Right, once we take this here, that's a sign of strength. And move. Right, so it's cool. I really like that we have a bias in play. Right, because now that you understand your bias, all you have to do is find an excuse to risk. And other than that, that's all it really falls down to. Yeah, so that's really all I got for today. Oof. That was a long one. 34 minutes. Anybody have any questions? Any questions? Cool. Because I have a question if you guys don't have questions. Sleep? Nah, man. I went to the mall. I gotta put up everything that I got. And I still gotta go wash the dishes. Yeah, because I ate right before the call. Well, no, I ate like 30 minutes before the call, but did not feel like doing the dishes. Don't think of any questions. All right, cool. I got a question. Who here, out of the 14 people in here, right, out of the 12 people, I'm sorry, excluding me and Sergio, who in here actually trades a very, very specific set of pairs? Right, and could you say yes, no, and then could you say the quantity? Say yes or no, or the and the quantity. Or you could just say the quantity. That's automatically yes. Two. There might be some new guys in here. You guys don't have to answer if you're new. So for the most part, how do you feel about that? Everybody that answered, I mean, everybody's low. I mean, honestly, I just want you guys to trade below 5. But how do you guys feel about that? It's less hectic. What else? What else? Just keep them coming. Keep them coming. Because I'm trying to show you guys a point. You maybe look at 1 to 3 more. Yeah, so even if you have a list of pairs that you trade, you only specifically stick to a certain quantity. Less hassle marking up, difficult to focus. Yes, exactly. Right? Because, right, with this style, with this ideology, with this approach, you can literally trade any pair that you want. Right? And that is because of the foundation behind what this is. Right? And with that, I mean, obviously, price moves supply and demand, and it moves through the process of order flow, which occurs through mitigations of sponsored candles and inefficiencies. That's pretty much the whole foundation rundown. And if you can understand that, you can trade any pair that you want, right? But the reason why I don't do that anymore is that, one, right, people that tend to not only teach but trade a lot of pairs and teach it, or just be a student about it, right? We pick and choose what kinds of setups we want to show you, right? Especially me, if I was trading every single pair, I'd just look back 2 hours before the call and I'd show you specific pairs on setups that I like because I like how they played out, right? But you guys know I haven't done that since we've started, and I've stuck to 2 to 3 pairs, and you guys have seen me or seen this happen, pretty much the process, through very distinct types of market movement, market timing, volatility levels, right? So something too that to add on to tendencies, right, is acknowledge, right, when your trades go obviously the way that you want them to, when they don't, right, and realize why, realize when you're in a range, realize when you're in an impulsive market, realize when you're in premium, right? Because it's the little details that is going to accumulate to inevitable quote unquote success. I don't want to say success, but inevitable what's the word? I have it. What's the word? Inevitable improvement. Right? Because for the most part, I haven't changed what I've said for like the past 6 months. Right? But you guys are continuously getting better. Why is that? Helps you learn how to pair acts in different environments. Yes. Yep. And I mean, different environments too. You got to realize that there isn't new environments every single month. Right? There's probably different sections to your environment that you are in currently. right? But overall, cycles occur, right? Because you have to also understand, look at where we are on a macro scale, right? We are in a transitional phase. You know where we are here? This was gold here. And look at what happened after it popped, right? So you have to acknowledge too where you are in price, and pretty much being able to only do that to 3 different pairs is not only very calming, but it keeps you, pretty much keeps your instincts up, or pretty much on check. Concepts are always the same. Yeah, principles are always the same. Concepts aren't necessarily always the same, but principle is. All right, I hope that makes sense. But yeah, that's my little rant for tonight. 40-minute Zoom. So yeah, I guess that's it for tonight. Yeah, for sure.